A financial plan for every Indian. When Arya set this bold vision, we knew it wasn't simply an aspiration, but a profound commitment to our nation's financial future. The questions before us are compelling. Can this financial plan truly reach every citizen? Will the digital revolution be the catalyst that makes this possible? Or does the solution lie elsewhere? To explore these critical questions, let's call upon an exceptional panel of visionaries. BG Mahesh, the pioneering founder of oneindia.com, Bipin Preet Singh, Managing Director, Co-founder and CEO of MobiKwik Systems Limited, and Sudhir Shyam, Economic Advisor to the Central Government. Gentlemen, please join us on stage. And guiding this important conversation will be Arya Board Member Mr. Harsh Roongta of Fee Only Investment Advisors LLP. Please join me in giving them a warm welcome on the stage, guys. Come on.
So I don't know how many of you have actually woken up after lunch. So could you give me a sign that you guys are awake? Okay. I mean, I don't know how many of you noticed, but the most difficult question, which only 49% of us got right, was the one on KYC. And that tells you, how difficult it is and what kind of misinformation there is about KYC. But to give a little bit of background before we dive into the discussion itself, at Arya, when we were doing this brainstorming on how we can contribute to a Viksit Bharat by 2047, one of the things that we thought we as a profession could do was plan for a this big, hairy, audacious goal, a financial plan for every Indian. And, that would be our profession's contribution to it. A financial plan for every Indian transforms life, citizen by citizen. It transforms one life at a time. And if we can reach 1,500 lives, that will definitely lead to a Viksit Bharat. And that was the thought behind the theme, the goal that we had. And one of the things, or among the three things that we'll definitely need to be able to reach that is technology, getting access to those 1,500 citizens, and data of those 1,500 citizens. As far as technology is concerned, I think India is arguably digitally the most advanced nation on earth. I mean, the population scale in digital infrastructure that we have already implemented, and much kudos to the government for that. Whether it is the India Stack or the Jam Trinity that delivered, close to 600 million Jan Dhan accounts, or obviously UPI, which is something that has taken the entire world by storm, or DigiLocker. DigiLocker has more than 500 million users today, or eSign, or CKYC that we will talk about today, or account aggregator, again something that we will talk about today. But that's all in the financial sector, more or less. Even non-financial sectors, whether you take governance, whether you take ONDC, look at the scale of what has been envisaged there. Look at the health sector, navigation, transportation sector, you name it. And the digital infrastructure aims to reach 1,500 million citizens. So very clearly we have the technological prowess to be able to deliver this. So how about access? And that's, I think, where CKYC comes in, or CKYC 2 comes in. CKYC has already been there for about 7-8 years. CKYC 2 clearly comes in there. The the promise that was made to us at that time very clearly is that if there is a bank account, if a citizen has a bank account, then why does he need to do anything else? Why can't the citizen get access to all financial services based on the bank account KYC that has been done, or the promise that you update your info, if your address changes and you update it in one place, can it be automatically updated and notified to everybody else? This was something that the finance minister promised to us in the 2022 budget. And I think delivering that is among the goals that Mr. Sudhir Shyam has. He looks at CKYC2. He's the economic advisor in the Department of Financial Services, Government of India. We will talk to him about some of the challenges and opportunities in CKYC2. Next, of course, is data. And that's where the account aggregator framework comes in. The dream of a citizen getting access to their data, consent base, being able to share it with the people they choose, that data being used for working out the asset allocation, doing a risk profiling, getting details about the resources that they can share, their goals, all that will ultimately help in delivering the financial plan that we are talking about here. And to talk about that, we have Mr. B.G. Mahesh, the CEO of Sahamati Foundation, which evangelizes the adoption of the account aggregator framework across the entire ecosystem. But before I go to Mahesh and Mr. Sudhir Shyam, let me talk to my third guest here, Mr. Bipin Preet Singh. Mr. Bipin Preet Singh has a very unique he has done something unique. He was faced with a dilemma. He had limited savings and he was faced with the dilemma whether, and this I picked up from your biodata, sir. Okay. He was faced with the dilemma whether he should use the savings for doing an expensive MBA or to use it for the startup. And he chose to use it for the startup, which has since turned into a listed company, MobiKwik. And I'm sure that MobiKwik has today 172 million customers. It's a prepaid, it's a wallet, PPI. They have got a payment aggregator license as well. So I'm sure we've heard stories about the triumphs of MobiKwik. What I would like you to do today, Bipin, is to take us through how you achieved this scale and what are the things you would need to take this scale to every citizen, 1,500 citizens. And what do you need from our guests here tonight?
So, firstly, thank you. Thanks, Harsh, for inviting me for this panel. This is a kind of an unusual event for me to attend. It's the first time I'm here as part of ARIA Registered Investment Advisors, and what I can tell you is that every time I come to Mumbai, I am impressed by the people I meet in terms of their understanding of finance. And I was just looking at the quiz, earlier. I couldn't have answered half of them, those questions that were being answered. So it's so impressive, and it's so deeply embedded in this city, finance. And I'm actually quite surprised by the gathering here, by the size of the gathering here, about the number of people and the depth of the work that everyone involved here is doing. But I am not like a person who actually learned anything about finance, right? I am a technologist. I actually passed out of IIT Delhi. I studied electrical engineering. I did BTech way back more than 20 years ago. And then I was working in Bangalore designing chips for companies like NVIDIA and Intel. Before, I was trying to figure out what to do next. And it was not clear to me. I wanted to do an MBA or something else. I had like some limited savings. And I came from a fairly lower middle class kind of a background. And being the eldest son, they all wanted me to keep working and earning, right? That's how middle class families in India expect their sons to do. But I had some idea, and I also, was not fully satisfied with what I was doing at that time in my job, because I was designing chips, but it was not necessarily resulting into kind of job satisfaction, because I was making it in India for some country outside, getting manufactured and used elsewhere. I wanted to do something here, and I wanted to make some impact. And that's how MobiKwik started, literally. And MobiKwik started out of a need, very basic need, and it's more than 15 years ago, of doing a mobile recharge, just using internet. And at that time, there were no smartphones. And being an engineer, I just wrote the code, and I made the website. And the first day I made the code, every day people started coming and started doing the transactions. And the basic idea was that of a mobile wallet, which is what we are even today. And of course, we have expanded into payments, and we have more than 170 million users. We add about 15 to 20 million new users every year. We are a well-known and trusted brand in bill payments, in UPI as well now. We've created new brands in UPI called Pocket UPI. But after doing that for a few years, we realized that if we are only offering payments to our customers, then maybe we are not doing enough. And so we decided that, why not offer other financial products also on the MobiKwik app. And one of the first products that we offered is, and we saw that there is need for credit. Most people in India, I mean, not people sitting here, but beyond the top cities, do not have easy access to credit. They don't have a credit card. They don't have easily get loans from the banks. So we saw that how about using the data that we have, looking at their bill payment data, looking at their transaction data, looking at the kind of smartphones that they have, can we build like some kind of a model, and we can give that data to our partners, who could be NBFCs or banks, and let them basically underwrite those loans. And so we built that business, and now these two businesses we have built to scale. But even after that, I was not satisfied, because I said, okay, people can make payments on our app. If they want a loan, they can get it. But there are also people who have money in their bank account, and I'm aware of it, but they don't know how to manage it. They don't know how to invest. They don't know where to put it. And they are bombarded with so many different messages across. Put money in mutual funds, put money here, put money in fixed deposits, put money in gold, this and that. So we said, the kind of people that they are there on the app, they come from all over. But mostly they are people who are tier 2, tier 3 and beyond. They struggle with, the basic struggle is with financial comprehension, is their understanding of what each term means. You'll be surprised, many people clicked on mutual funds thinking that they can get a loan. And that is still the level of financial literacy that is there in our country. So we decided that we want to have an initiative in this, and we have an investment advisory license from SEBI. And we started having direct plans of mutual funds on the MobiKwik app. And at the same time, started building a PFM tool, which is called Lens, which is based actually on account aggregator, and also, of course, leverages CKYC. But basically what it does, it reads in your bank statement directly from account aggregator, all your bank statements, and gives you useful insights, actionable insights on what's happening in your bank account. Simple things like whether bank is charging you some money, where you are transferring the money, how your investments, spends, etc. are getting categorized, whether you are missing your EMI date, etc. Simple things, which in a world where you have enough money, your banker will actually tell you. But this is a person who's sitting 100 kilometers from here, doesn't have that luxury. And so with small ticket size, can you build a system which using technology and using data, create the right financial advice and right nudges for the end customer. So with that goal, we built it. I think we are just still building it. We have, I think, close to, if I'm not wrong, 35 to 40 lakh customers who are already as part of this PFM ecosystem. The next problems that we are trying to solve are more around how we can bridge the gap from text to voice and introduce artificial intelligence within this space, because we see that, you know, not everybody is comfortable with numbers and they need someone to talk to, the job that you guys do. But what we are trying to do is do this job for those people who are easily not accessible as part of this PFM. So it's been a long journey for us, and it's not been easy. I mean, fintech in India has gone through its very highs, and also it's gone through very lows also last year. But one thing I always believed, and is that if you're solving a real problem for the end customer and they using your product, then I think you can clearly see progress. And that is what we kept on saying. We became the first fintech actually to become profitable in FY24. And then we are one of the first few fintechs to actually list in the BSE, which we did just about in December 2024. But I would argue that I am very, very bullish on this space. And I think there is a lot of opportunity to utilize technology, especially the new advanced technology that is coming up, and actually build the right financial solution. I would argue not just the financial plan, but also the financial solution which every Indian deserves. Thank you.
So thanks, Bipin. I mean, did you see that logical, the progression? I mean, what started off as a payment mechanism graduated to loans. And I think today there are close to 4 million clients who use the personal finance management tool called Lens, and which has, among other things, it has got investments, etc. And very clearly that is by leveraging technology at a population scale. Among the issues, and as we had promised, I want to turn to Mr. Sudhir Shyam. Just could somebody take a guess? CKYC, according to you, has how many million records? Okay, or let's put it in crores, that's easier to understand. Okay, how many of you think CKYC has 50 crore records? How many of you think they have 100 crore records? They definitely don't have 150, so 50 or 100. How many 50? Okay, how many 100? Okay, that's a fair sprinkling. But there is a lot of, misinformation about CKYC. And of course, in the securities market where we operate, we have a parallel system. So I really want to turn to you and, ask you as to what's the real number? It's 100 crores, you just told me, and that made me fall out of my chair. These are 100 crore unique clients. And the bankable population of India is 120 crores. I mean, 30 crores would probably be infants. So, I mean, 100 crores CKYC numbers exist in the CKYC registry. That, I think, is the power, if at all we can leverage it. So, I turn to you, Mr. Sudhir Shyam. What are the challenges and tribulations that you are facing in CKYC 2 to deliver the dream that if you have a bank account, you can access comprehensive financial services? I modify at one place, it automatically modifies everywhere else.
Let me first of all thank AREA for inviting me to this forum. I think when Mr. Harsh Roongta contacted me, I was wondering how do I fit into such forum. So he actually explained to me the topic of discussion, the broader investment planning. So I thought investment planning, it's nothing but planning your financial services. And now when you talk about financial services, I think at the very fundamental level, the process which comes to mind is the KYC process, in the absence of which nobody can avail any financial services. Now, I think in the course of our direct or indirect interaction with the various stakeholders in the government, we actually are conscious of the fact that the kind of I will say the pain under which the ordinary citizens has to go for KYC and the many related issues. I thought it will be a good opportunity to share my experience, what we have done so far to kind of streamline the system and lessen that pain, because it obviously, it linked to the ease of living, it impacts our day-to-day life. So Mr. Roongta actually talked about the central KYC registry. The idea was first mooted in the 2014-15 budget announcement, where a concept was visualized where we have to set up a central registry of KYC records. The idea was that once you do your KYC and after that you want to avail any financial services, should not be only restricted to banking, anything, insurance, mutual fund, pension policy. So you don't have to undergo the KYC all over again. So with that objective in mind, the central KYC registry was set up in 2016. And so far, as Mr. Roongta pointed out, massive digitization of KYC records has taken place. And we have till today about 100 crores KYC records available with CKYC registry. But the idea behind the lessening the pain for KYC process, which was initially conceptualized, at the very practical level, we thought that it's not progressing in a way which we had visualized initially. And there are many issues behind, which are actually related to that phenomena. Partly, the whole KYC requirement, it flows from the money laundering legal framework. And at the, if you talk about the international level, we have this Financial Action Task Force. India is, as you know, signatory to that task force. So there are certain obligations which have to be kept in mind at the time of KYC. And so the that obligation led to the enactment of Prevention of Money Laundering Act and rules. So the whole KYC framework actually flows from that legal framework. Now, some of the obligations which have been cast on the regulatory entities probably make them fearful in terms of complying to those obligations. Having said that, there are enough safeguards actually already mentioned in that legal framework, which permits third-party reliance, in the sense if the KYC has been done already by some entity, it can be relied upon by the another regulated entity. But as I said, the progress was not up to the expectations. So in the last year, sometimes in July, government made some very important amendment in the PML rules, which has now made it mandatory for regulated entity to make CKYC ID as the default ID for the KYC or when somebody is onboarded for any financial product. As you know, when the first time KYC is done, the regulated entity concerned will upload that KYC on the central KYC registry portal, and that particular client will be, assigned a unique CKYC ID identity number that can be carried to any regulated entity for onboarding, depending on what financial services he wants. Now that it has become mandatory for the regulated entity to use that CKYC ID for onboarding, what will happen is it will become a default CKYC ID, meaning thereby that first thing which the regulated entity has to ask the customers is whether he has any CKYC ID. Now, I believe in most of the cases, we are not aware of the CKYC ID, despite the fact that when CKYC ID, when the KYC ID is uploaded, a unique number is assigned. So, even if the customer does not know the CKYC ID, all the regulated entities have been asked to make, functionality in their system to search the CKYC ID. Using the demographic information like name, date of birth, mother's name, father's name, etc. Now, once the CKYC ID is known, very easy to download all the documents which were, taken at the time of KYC process. So that makes it, much simpler, and then again, it is, the CKYC ID is valid across the regulators, and it has been mandated under the prevention of money laundering rules. So idea was to make it smoother and portable all across the financial regulators. The second thing, at the time of re-KYC or updating our KYC, there also all of us face a lot of problems. We update our KYC information at one place, but to have this, to get this updated at, all those points where we already have opened account was not so seamless, so far. So another amendment again was made to make it seamless, in the sense that once the CKYC ID, when the KYC is updated at any point where regulated entity uploads that information, now that updated information will travel simultaneously to all the regulated entities where that client has a account-based relationship. And all the regulated entities have been mandated by law now to consume that updated information and make updation in their records. So means it will be happening seamlessly now, and you don't have to update your KYC information at every point. That was one, another major change which actually happened. And the third thing, I think, what I think KYC, the RBI has done is, see, these periodic updations, they are done as per, at least in the bank's case, are done as per the risk categorization. And RBI has laid down, detailed guidelines for categorizing clients into the three major categories: low risk, medium risk, and high risk. Now, depending on the risk profile, every client has to either get it updated in 2 years, 6 years, or 10 years, depending on the risk profile. What earlier used to happen is that this 2 years, 6 years, or 10 years period will be counted from the date of opening of the account. So RBI made a small change, but it's very, in terms of impact, it's huge. What now it says that once it gets updated, the 2 years, 6 years, or 10 years period will be counted from that particular date. So it becomes dynamic now. And so to that extent, I think the pain of repeating your KYC again and again to a large extent has been lessened. What I'm saying is that we are conscious of the fact, the kind of problems ordinary citizens face in terms of their KYC process, the periodicity and other things. And we are actually, gradually we are trying to make progress. The challenge lies in the fact that, the financial sector regulators, major regulators have their own KYC framework. Bringing everybody on one page means some commonality has to be developed, which we are actually in the process of, kind of getting those regulators onboarded for one uniform framework. So these are some of the developments which I thought have taken place. I thought will be, good opportunity to share with the audience.
So, I mean, it was amazing. When we first spoke to him, the openness with which they were willing to talk regarding this, I think clearly there is a lot more to be communicated. For example, we spoke about CKYC ID being the common ID. How many people in the room know their own CKYC ID? You can see my hand is not up. Right? I just learned that there is a missed call facility, right? You can give a missed call and if based on that registered number, you will get a link back from which if you fill, you will get your CKYC number. There is also a view-only CKYC functionality that Mr. Sudhir Shyam spoke about. So there is a lot of development that is happening on CKYC, including first-time people who do it, including modification being conveyed to everybody. I think in communicating this to the larger public is where I think more effort could perhaps be done. And the bigger area, before Mahesh, I turn to you, the bigger area, of course, is that in the securities market, sir, okay, we have this dual thing. Okay, we have the KRAs where we have to do the KYC and the CKYC, both the places we have to do. And when I was talking to you, you were saying that that there is a possibility that at some point of time in the future this can be sort of synchronized. Perhaps quickly, if you would.
Yeah, so as you know, under the law, the regulated entity or reporting entity has to upload the KYC information on the CKYC portal. Now, before the CKYC portal came into existence, there was already KRA in existence in the securities market. So what is happening, at least for the securities market, the KYC information of the clients are being uploaded on the KRA portal as well as on the portal of CKYCR. So there is definitely a duplicacy in that effort, So the logical thing is that, there should be synchronization. And so we are actually, when we started, discussing about it, how to synchronize it, as you know, the law makes it very clear that the uploading has to be done by the regulated entity. Now, so there comes the challenge. KRA, in a very strict sense of the term, is not a regulated entity in the under the PMLA. Now we are trying to resolve it. It's a more of a legal issue how to resolve it. We are already in the process, but the view is very clear that there should be a definite synchronization. And we also thought why, in terms of at least the KYC registry, should we continue to have KRA and also the CKYCR. So, the KRA, we are told that, apart from the being the KYC registry for securities market, it also, provides different value-added services. To that extent, I think there is a case for continuing both the registry, but the point is well taken that there should be a clear synchronization between KRA and CKYCR. The work is in progress. and I think it should happen.
That's really nice to hear, isn't it? That we don't have to work with both, it can happen simultaneously. Let me turn to you, Mahesh. And, account aggregator is an absolutely essential part if we are to deliver on financial plan for every Indian citizen.
Yes, sure.
So far, of course, the account aggregator framework has done, great work in terms of enabling, and I see the figures, and the disclosure is that I'm on the governing council of Sahamati as well. The figures that are there, what the account aggregator framework has enabled in terms of the amount of loans is really, really commendable. Mahesh can share some figures. For the personal finance management, for the kind of tools that Bipin spoke about, again, it has done great work. But for a lot of other things, okay, and especially for the fraternity that we have in the room,
Yes.
okay, the impact of account aggregator is still in the potential stage, okay, not in the realized stage, primarily because of interoperability issues and, some of the FIPs not being on board, etc. And there are several issues, right? Economic costs who are going to bear, all those issues that account aggregator is already. When do you think that this will, and this time I'm going to be a little selfish and talk about for the financial planning
Yes,
community.
sure.
When do you think we can build, at a click of a client's consent, I can build the asset allocation for the client?
So you can build it now, actually.
Okay.
It's already there. Okay, so frankly, it's there. So, I want to know how many of you in the audience here have already, implemented this very, very important framework. How many of you have implemented account aggregator framework? Or how many of you have heard about it? Okay, so if you have heard about it, I'm just curious to know how come you have not implemented it. Okay, so we'll help you. Sahamati is actually there, okay, to help, all of you, and it is for free. We all like the word free, right? So for anybody who wanted to help to use this important framework. So now over 8 crore actually people in the country, about 8% of the population is already using this facility. Almost 2.5 billion financial accounts are already there on the account aggregator framework. And when it comes to lending, the most popular use case, every month, from about, we have asked about 8 lenders, they are lending every month like over 10,000 crores of loan, every month. And when it actually comes to your PFM, your personal finance management, in FY24, about 1 crore of your people were using it. For FY25, it is already about 2.5 crore. So people are using it.
Oh, absolutely.
But why for all of you, account aggregator is the most important thing. I actually use the word, it is not important, it is the most important thing. I think you all would agree the hardest actually phase for you in the relationship of a client is when you onboard a new client. Okay, because when you ask for their financial documents, the insurance, and what holdings you have, they go actually searching about where those documents are and all of that. So that to complete the onboarding of a new client, it won't happen instantly, but it could be 15 days, 1 month, and from somebody I heard it is almost 3 months. But with account aggregator, it will be about 5 minutes. Instantly, with the consent of the client, you will have access to actually the bank account statements, their insurance, their, all their holdings in the capital market, because your financial planning is not about investment only. It is about if they have to have an FD with the bank, if they have to insure their life, it includes actually the whole thing. So, like as we say that your motto is a financial actually plan for every citizen, but what we instead actually say is each individual requires their own balance sheet. Okay, because it shows how healthy you are. So the account aggregator is a very, very important foundational digital public infrastructure, which each of the of you who are in the room and each of your members, I would say that they will not be able to survive without the DP, this framework, because it reduces the cost of acquiring the data on a regular basis, whether every month, every 15 days, or anything like that. And I would also say that you do have the account aggregators in India today, which have onboarded almost all banks. Also, and from the SEBI world, all the four entities, CDSL, NSDL, KFIN, CAMS, is actually there. So it is there. We do have problems. I'm not telling it is a very thing, but so where we were 6 months ago, 1 year ago, I mean, we had issues. We had actually failure. It has improved. Okay, and now we have some amount of data quality issues, but it'll become okay. We have to understand that this is a very, very large digital framework. It is being operated at a population scale, so it will have issues and it will be solved. Okay, so for those who want to implement it, I am saying that it is already there, it is already up and running. And for all of you, it is not about providing only personal finance management, it is also about financial planning. Like if you have to sit with your client and see their, actually their financials, account aggregator framework is the only way you will be able to do business. That will be the only way you will be able to scale your business.
So I think what Mahesh just mentioned is that the foundation of a financial plan is a balance sheet, and I think what account aggregator does is to be able to build that balance sheet based on the client's consent, and presumably that has been done successfully by Bipin, and that's how you've got the 4 million clients who use Lens. There are lots of questions, so I am going to, and there are lots of people in the audience who are wanting to ask these questions, but let me ask one, Mahesh, which I've always asked you before as well, is that, one of the things is for the citizen to be able to use their own data.
Correct.
With whomsoever they want, and
Yes.
perhaps that is the promise in the DPDP Act
Yes.
as well.
Yeah.
So today, independently, I can download my bank account, my insurance policies, my securities market transactions and holdings into the DigiLocker.
Yes.
Right? But on an aggregate basis, through the account aggregator, I cannot do it, because although it's very much more convenient, because at one place I am able to give out all the consents. Okay? And you were mentioning when we were talking that there are some issues around that. Perhaps if you could.
So the thing is, with a few of the account aggregator apps, you are able to download actually the statements onto your phone. It's already there. Okay, but you will not be able to store it inside the account aggregator app, which I think it is the right decision. Account aggregator acts like a consent manager, like the UPI app also is a CM consent manager, because it allows you give the consent and the payment is made. Account aggregator will do the same, but it is not with actually the payment, it is with the data transfer. Now, we have been trying, and we hope we will be successful this year, to ensure that there is a pipe from the account aggregators actually to DigiLocker. Okay, so by which I am able to download my statements and actually push it into the DigiLocker. And again, from there, we are able to pull and have it shared with anybody. But we have to understand that for everything, all these things will not happen on the day one.
Absolutely.
Okay, we have to wait. We have to make sure the stability is there. It has scaled, and one by one. Like for example, when we started 3 years ago, it was only about 8 private banks were there. Afterwards, all the public sector banks came. Okay, then came SEBI. Okay, then came insurance in a small way, and from little over a year, we also have GST. So, you have to actually build it brick by brick, and we have to ensure the foundation is strong. Otherwise, the whole thing will collapse. But there will be a day, I mean, we hope, which we are working on, okay, to ensure that we get CBDT also onto account aggregator, which is income tax. So income tax, if it comes in, even for you, it is very useful because I'm very easily able to share actually my records, with the planner. It's a very important document.
Absolutely.
Right? So we are able to do. Then, see, we have to, see, if any new financial type has to be added to the account aggregator, you ask for the DigiLocker, it has to be approved by the Reserve Bank of India and the relevant ministry, okay, that we want to shake hands. But so 4 years ago, it was very hard for us to go and tell, okay, we want this, we want this, we want this. See, now we are able to show the impact. We got to show the impact and say, if we get more kinds of data, financial data, we are able to do a lot more, for the citizen at large. So now I feel we have actually shown, we have proved, and we have a long way to go. But now is the time where we can go and approach DigiLocker and a provident fund. I think that should also hopefully happen. We are already in talks. So now one by one we are going to add, which each of that for you will be a very, very important data signal.
Absolutely. And, to add to what Mahesh said, this has all been done as a not-for-profit organization. There is no formal recognition. Of course, I mean, Mahesh meets everybody, including the finance minister, RBI governor, etc. But there is no formal recognition of Sahamati. It will hopefully follow soon. But this is the scale of work that has been accomplished by Sahamati, acting purely as a voluntary organization. I think this is something that is commendable. I think the amount of work that has been done without formal recognition is mind-blowing. The energy that I see from the people at Sahamati is just mind-blowing. It keeps people like us energized. We say, why can't Arya also do something similar? Because the impact that you have is huge. So I think that is the key. I'm going to turn quickly to one more question before I sort of throw it open to the audience, right? There was Mr. Biharilal Devra, BD as we call him. I don't know if he's there in the room. He heads compliance in one of the leading PMS providers. And he sent me the question that I had sent you, okay? That it seems that remote video KYC which is permitted, it is being done, is, I believe, not allowed under the PML rules. Because as we were discussing, that the PML rules provide that either the customer has to come to the bank or the bank has to go to the customer. It can't be done on a remote basis. How true is that? And, what's your comment on that?
So, any one of you has actually, did you have any occasion to go through the provisions under the PML rules, which, takes care of the KYC process, at least that part?
I have,
Okay.
because of the panel,
Because
not
of
before,
okay.
without that.
So you rightly pointed out there is one annexure in that particular rules which gives a very detailed process about the digital KYC. And it's very prescriptive in the sense it gives, each step a client has to, how he should, display his officially valid documents, what an RE or representative of RE has to do. So it's a detailed guideline. Now there you are completely correct. There it says that either the client has to visit the RE's place or the RE representative has to visit the client's place. So in both the cases, it's actually a face-to-face interaction. So it looks like if you only go through the PML rules, it looks like the video CIP is not permissible under PML rules, but which is not correct. The digital KYC is one particular way of doing the, the KYC process other than the conventional KYC, where you go to the branch, show your officially valid documents. The manager compares it to the original documents and verify it. The other way is the digital KYC as it is mentioned in this thing. But see, the PML rules, is laid down the broad principles of the PML concerns. What should be the safeguard which you should keep in mind while doing the KYC. Based on that, what RBI has done is, RBI has issued a detailed guidelines on the VCIP process, which allows the, regulated entity, again, under the RBI's, jurisdiction, to do KYC from the remote place. There, of course, the only requirement is that at the other end, the representative of the RBI has to be there, has to be present at the time of doing the video KYC. And there are a whole lot of safeguards which have been added in addition to what you find in the digital KYC processes. Things like, you have also, apart from other OVDs, you also have to display your PAN, which is not the requirement in the digital KYC if you see the under the PML. The other thing is that VCIP, the video CIP, can only be done in the domestic jurisdiction, cannot be done from the foreign jurisdiction. And of course, when you actually, the regulated entities, what kind of VCIP infrastructure are required, again, there are, detailed guidelines. The idea is that since it is a kind of KYC being done from the remote location, enough safeguards should be built in the process to avoid any possible, money laundering attempt or fraudulent attempt. So, so the short point is that the video CIP is permissible and within the broader framework of PML rules.
Thank you. So Bipin, let me come to you. You have this goal to go from 172 million to as close to 1500 million as possible. What would be your specific ask? You have heard the discussion. What would be your specific ask from these two gentlemen here? We have got them on stage. You can get them to commit.
So I think, MobiKwik is here today and it's able to serve its 172 million customers simply because of the foundation that has been created over the last 10 years. With digital KYC being one of the most important ones, because without that, there is no financial product or service you can provide digitally. So we've been huge beneficiaries of that. And obviously with account aggregator, I think with Mr. Mahesh and the work that he has done and the account aggregator ecosystem that has been set up, I don't think something like this exists anywhere else in the world. I have not seen, because in US and all, if you want to get bank information about any customer, there is some private companies which are doing tie-ups, but there is nothing of this scale which is centrally managed and so on. So I would say that what we have achieved with KYC, with AA for the last 10 years, it's really commendable. Obviously, there are issues around in both of these. I would say the issues and the asks are more around how do you improve access, easy access, and make it easy and convenient for the end user, for the end customers, much more than what it is today. And that's a journey. So I would say that where we've started from, we've already made a lot of progress. But my submission is that as customers become more digital savvy, then we need to make it simpler for them to participate in the financial ecosystem with both with KYC as well as with the account aggregator. Especially in account aggregator, I think access to information, real-time access to information, I think that is still, in my view, it's a work in progress. It is happening, but it is still, you know, I imagine a world where a person or a customer on MobiKwik app doesn't need to log into his bank account to view his bank statement.
The bank would have a problem with that, but
and
yes.
I know that's serving a different purpose, but still the thing is we are living in an era where people want access to, let's say, multiple bank accounts information, which is today possible on the MobiKwik app.
Correct.
That you can actually aggregate your ICICI account and SBI account and HDFC account all together and get one consolidated statement, and the value add that we provide on top of it, which is the analytics and the insights, which the banks don't provide today. You know, they give you some narration in the bank, and you have to first figure out whether it's a UPI transaction or a money transfer or what exactly it is. And then, you know, after that, only once the customers understand that information, comprehend that information, that they can actually take the right financial decisions. You know, so from an account aggregator point of view, I would argue that the quality of information is actually already improved significantly. I think it's about the more access to some of the areas where it is not yet there. That might be the one that has to be solved over the next few years.
Excellent. So I think Bipin is pretty happy with already what has been achieved. Let me, I don't know how much time we have, but yes. So let me ask quickly, both of you, okay. You know, SEBI has introduced this very innovative, I think, again, one of its kind in the world, a centralized death claim reporting that automatically, and that prevents fraud as well, right? You report death to one intermediary in the securities market, and that is spread through the KRAs to every intermediary who has ever consumed that particular PAN. And I think that's an important, it's an important thing to ease, you know, the lives of the legal heirs of the person, as well as it's a fraud control mechanism. So how would something like that, discovery of assets through the account aggregator system or prevention of frauds, and Mahesh, you can go first, how would account aggregator system, you know, look at encouraging the death claim, and then Mr. Sudhir Shyam on how frauds can be prevented?
So we have heard from, you know, few of the PFM providers, that you know, so many of the users had forgotten that they had a bank account with XYZ. Okay. It's only because they opened an account with a PFM, and if they had the same mobile number seeded. I mean, you know, that is the basic. You know, it was able to locate in which institutions, you know, you have the bank account. Okay, that is a solvable problem. I think the harder problem is if you have accounts, the financial accounts in which you have the landline number or you don't have. So that is actually a puzzle which obviously the account aggregator will not be able to solve. But at least now, because of our framework and your MobiKwik type of you know, solutions, you'll be at least able to discover all the financial accounts you actually have. Then whatever you want to do to each account to whom you want to do, you know, you are able to do that.
So the discovery is very much
very important.
Enabled.
Yes,
it's already enabled. Yeah. Mr. Sudhir Shyam?
As you rightly said, it's a very important feature, you know, in the KRA system. Right now, the CKYC registry does not have this system, but it is completely doable in the sense when the RE has the first, point of interface between the customers and the bank or any other agency. So they can always update that information about if somebody has expired, somebody has, died. The other way of doing it is to, to link it with the, you have this registrar of deaths and births. That is the other way of, linking
the voting,
yes.
voting
So that is the
commission
other
is
way
doing.
of integrating your database. So directly that information flows to you. So in that sense, it's completely doable. And in the next version of CKYCR, we are definitely considering this.
CKYC 3 will have
Yes.
that.
2. Let us talk about 2 right
Okay.
now. Yes.
Okay, that's even nicer to hear. I'm going to raise a question since we are running out of time. I'm not giving it to Renu, but I'm raising Renu, our incoming chairperson for ARIA. 65% of all RIAs are individuals. And the entire CKYC framework, and this may not strictly be related to financial planning, but I can't let you go without asking this question. 65% odd RIAs are individuals. All the CKYC regulations are framed with keeping big institutions, companies like MobiKwik and, banks and insurance companies in mind. Individuals by their very nature, and most of them have solo practices. So, even simple things like having a maker or a checker for CKYC becomes an issue with a solo practitioner. They don't have a second person, right? It may not be true of people, all the people in the room. I mean, a lot of us have large practices, but it is true of a number of people. And we hope to be able to increase. I think in the morning, Mr. Anant Narayan was here, and we clearly want to increase the number of individuals coming into this profession. Is there something that CKYC could look at to ease the process, or look at it from the point of view of solo practitioners also, protecting everything that is required? I mean,
so as you know, at the very fundamental level, the first requirement, as everybody is well aware, that only the regulated entity, or in the PMLA they say the reporting entity, can upload the information on CKYC portal. Nobody else can access that portal.
Correct.
Number one.
Correct.
Now, during our course of discussion earlier, you said you are actually covered under.
We are an intermediary.
Now, the next question is the maker and checker thing. This is, I think, there must be some. It's probably the part of some safeguards built in the system to ensure that the information which is being uploaded is authentic enough for others to utilize.
Reliable.
Because as I said, CKYCR repository is nothing else but creating a public utility.
Correct.
Somebody uploads that information which enables somebody else to download it and onboard that customer. So in that sense, you are creating a public utility. Now, when you create a public utility, these safeguards have to be there. Otherwise, there is always a danger of kind of multiplying some suboptimal KYC process. So that has to be kept in mind. But having said that, now that I think this has been raised, without it's at a public forum, without giving any commitment, we will definitely look into it. Right?
There. Okay. I mean, this has been raised so many times in the WhatsApp group. Okay. That today, at least, finally, we have an answer that it will be considered. Whether it will be done or not done, we don't really know. We have run out of time. Can we ask, is it possible, can we have time for one question? Somebody wants to ask a question? One question? Anybody? Okay, I think all the questions seem to have been answered, right? Is there anything, okay, and this really is to you, Mahesh, is that today unclaimed assets, okay, are about 1.60 lakh crores. If you talk of the investor education protection fund in which the unclaimed shares go,
Yeah.
or the unclaimed insurance policies, the Depositors Education and Awareness Fund of RBI, is there anything the account aggregator can do
Yes,
to
it
bring
can.
down that number?
See, definitely, like, you're currently in the framework, it will inform the owner of the account whether the account has a nominee or not. For now, it's only a Boolean answer, it has or not. So ideally, it should show who are the nominees, but you could always go to the bank account, online, and see who it is. But in one place, you possibly actually in the PFM account, it can show for the accounts whether you have a nominee or not, and on that you can act. So it is the first step towards ensuring, the all the asset you have, built over time working hard, like it won't be stuck. So once that is done, and we are working actually towards where the name of the nominee is also shared, by which we will know. But even for that, we need to have some guardrails. Not everybody should be able to see who, because then, the family fights will start and all, if anybody can see that. So there has to be guardrails on who can see or not. But as of now, it is, we already have a solution, but it is a bit half-baked.
Thank you, Mahesh, Mr. Sudhir Shyam, Bipin. I think what we just discussed tells us that the infrastructure that we have created, or in the process of creating, this goal, the big, hairy, audacious goal of 1,500 million individual citizens of this country, for each of them to have a financial plan, and for each of them their lives being transformed, whether it is managing their loans, whether it is managing their budgets, whether it is managing their investments, whether it is managing their insurance, whether it is meeting their goals, all in accordance with the proper asset allocation and their risk profile. This is something which is very clearly within reach, thanks to all the population scale digital infrastructure that is being built, thanks also to CKYC, account aggregator, and we hope that there will be many more MobiKwiks. I mean, we hope that there will be more competition to MobiKwik, and that between all of them and between the people in this room, we will cover all the 150 crore Indian citizens well before 2047. With that, thank you everyone.